Hi traders, welcome back to another video. This video is going to be on daily bias. I know I have done a video on daily bias, but I'm doing it again so that you will learn how I determined my bias and also how I think whenever I come on chart. So before I continue, I would like to show you a video I did that explained the top-down analysis for the week. You can go to my channel and search for live session. You will see this video, daily bias simplified. Watch this video and you will know my direction for the week and how I was able to come up with the top-down analysis. The first thing you're going to do to determine your daily bias is to look at the previous price on the daily time frame. Here is the previous day candle on the daily time frame. And this is the previous candle before yesterday's candle. So this three candle is what you will use to frame your bias. So whenever you come to the market, you have to look at the two previous daily candle and look at what has happened with the candles. Now here we have this candle, which is the previous daily candle, and this is the previous daily candle before yesterday's candle. And what you need to do is to look at what the candle has done. Now there was an expansion because we see the candle close above the previous candle. Not just a candle closure, we've seen that price has taken out a significant high. Now this tells us that price is bullish because there is an expansion in the market. Because anytime you see an expansion and a significant high is taken, price is likely to leave you with fair value gap. And today we're expecting price to leave us with a fair value gap, meaning we don't want to see price closing this high. We want to see price staying at this high and taking out this high, because if you look at previous price action, anytime price takes out a swing high, a significant swing high, it leaves you with fair value gap. Now let's use this significant swing low. We see price leaving us with a gap. Here again, we see price taking out this low, price left us with a gap, with a fair value gap. Again, we see price taking out this low, price left a gap. What we want to see is that we want to see today price leaving us with a gap after taking this significant high. When you want to take a trade in this direction, you should also look at for this thing. When price close above this high, it creates an expansion, and now price need to retrace, or price need to consolidate, or price need to reverse from an expansion, because that is the rule. So here we have price creating this expansion and we see a retracement. Now you need to take your price grading tool, put it from the low to the high, and also determine the mean threshold. You don't want to see the equilibrium of this price being taken out, meaning you don't want to see price closing below this equilibrium, or you don't want to see price coming to this 25% of this candle. You want to see price staying above the 50% in the current day. So now what do you see? You see this is the current day, and you see price hasn't take out the 50%. Had it been the price is running at this level, I will say that I don't have confidence to be bullish again, because price will seek this imbalance. But right now price is staying above the 50%. What do you need to do after looking at the daily time frame? The next thing you're going to do is to go to the 1 hour time frame. Here is the previous day high. Let's put previous day high. This is the previous day high, and this is the current day low. Now what do you see? And this is the high that price has taken previously, which means yesterday price take out this high. Now we are left with something here. At this high, what do we see? We have a change in the state of delivery. And now on the 1 hour time frame, you have to determine the change in the state of delivery on the 1 hour time frame. And here we have this as a change in the state of delivery, meaning this is an opposite candle that entered into this fair value gap and price closed above it. Now this is the change in the state of delivery. We have to also look at for price making a change in the state of delivery in the current price range. What do I mean? The current price range on the 1 hour is from this low to this high. This is the current price range. And if you put your Fibonacci, you'll see that price came the 50% of the range, which is price is at discount, and we want to buy at discount and sell at premium. Now what you need to do is to look out for change in the state of delivery in the current price range. Now this is the current price range, and we have price retracing because I say after expansion you need to see an retracement or consolidation or reversal. Now we have a retracement, and we see price creating a change in the state of delivery, because this is a consecutive candle that was violated already on the 1 hour. So we have change in the state of delivery. So now we know that the direction of the market is bullish on 1 hour. The direction of the market is bullish on daily. Now the direction of the market is bullish on 1 hour. All we need to do is to wait for price to come and tap the change in the state of delivery. I want to introduce time to this trading. If you now put your indicator, you will see that this is the Asian session, this is the London session, and we are currently at the London launch hour. So we don't do anything. We will trade at the New York key zone, and the New York key zone is going to happen in the next hour. So now what we need to see is that we want to see price coming back into this change in the state of delivery before another expansion. So we want to see price coming here at the open. We want to see manipulation and price coming into the change in the state of delivery before any expansion. So I want to see something like this and then like this. But when price will be coming to this change in the state of delivery, we don't just enter the trade. We have to go to the 5 minutes time frame and look for confirmatory entry. I have a video on trade confirmatory entry. If you are struggling with trade entry, you can search on the channel. You'll find it. So now what I want to see is that I want to see price creating some sort of turtle soup, meaning we should have a protected low. Here is a protected low on this price range because we see price sweeping liquidity here. And I want to see price creating a protected low at the change in the state of delivery. Now within this range, from this low to this high, or any high that price will potentially make, I want to see price creating a turtle soup, meaning a protected low. I want to see price creating something like this before bullish prices, or price coming to this level, sweeping liquidity below this low, and then going bullish. So this is what I want to see on the 5 minutes time frame. And then on the 5 minutes time frame, if price should come and take any significant low or fair value gap at the 5 minutes time frame, in line with coming back to the change in the state of delivery, I want to see bullish breaker block or a turtle soup like I've explained. So price coming here to sweep liquidity and then going bullish. But I want to see price respecting the low. When price take out liquidity, I want to see price closing inside those range for me to take my prices. So currently now for dollar, I want to see price coming to this level for bullish prices. So I can be expecting price to come here. My stop loss will be below this level, and I'll be targeting 1:2 risk reward. And also we have a news that will be coming in New York session, and also that will facilitate the bullish move.